Now we're diving into SoFi's $2 billion deal with Fortress Investment Group, a major move that signals big growth in the fintech space. Joining me now to talk more about it is Emily from Barrons. She is the journalist behind a detailed report in this groundbreaking partnership. Thanks for joining us, Emily.
Hi, thanks for having me.
Tell me about what key factors you think drove SoFi to partner with Fortress for this $2 billion investment, first off.
Yeah, absolutely. So SoFi began as a lender focused on refinancing debt, but now operates through the three different segments: lending, financial services, and the technology platform. And we don't have a ton of information about this deal, but the CEO said in the press release they're looking to diversify towards less capital intensive, more fee-based sources of revenue. And the company posted their first quarter of profitability back in January. So I think this investment is one way to keep making strides on that, which is definitely something investors will be paying attention to.
And how do you think that this deal is positioned with SoFi in comparison to its fintech competitors?
Yeah, absolutely. So I think it's a little bit different. I think if we look at the fintech space, everybody's kind of doing something a little bit different. We've got a firm teaming up with Apple Pay, we've got PayPal in reinvention mode. And I think with SoFi, as I mentioned earlier, they started in lending. And I think that point of differentiation still really resonates with investors. We saw the stock rise 11% on Monday. So that's definitely something that still matters to investors. And yeah, we'll see what they say when they report earnings at the end of the month. But I think
But
this is definitely gonna be something to watch.
but what would you say is the key differentiator? You mentioned Apple Pay and a few other storylines that you're following, but from this vantage point, what do you think is that key differentiator from the competitors that are currently on the market?
I would say SoFi, they've definitely focused on the higher income consumer in the past. When I've spoken with Anthony, the CEO in the past, he's talked about, that higher income consumer. And I think the nature of this deal allows them to expand a bit to maybe people who wouldn't be in that core audience. And that's something that he's talked about for a long time now, is kind of expanding beyond that, the fundamental group.
Now, could you elaborate on how this expansion of the loan platform might affect SoFi's consumer base?
Yeah, absolutely. So there was a note earlier this week from some KBW analysts that were talking about the lending as a service business. So basically, loan applicants that were either rejected by SoFi, like the borrower doesn't fit the credit criteria, things like that, they would move to other loan origination partners, with SoFi then earning a referral fee. So it's a little bit different than what they've done in the past, but it brings other consumers into the space, right? Other customers that they might not otherwise have served, if that makes sense.
Now, through your reporting and through your conversations with the CEO, what risks do you see in SoFi's strategy with this investment, if any?
Honestly, I wouldn't say I see risks. I think that it's an interesting step because in the most recent quarter, the CEO and analysts had definitely been focusing on those other two platforms, the financial services and technology, and they had toned back a little bit to focus on lending. So a deal like this, obviously, investors were really excited about it. I don't really see it as a risk. I see it as a little bit more return to the roots. But I do definitely see them still innovating in the technology space, in the fin services space. I think this just kind of, as I said, goes back to the roots a little bit.
How would you say this partnership aligns with the broader trends right now that we're seeing in the fintech sector? I know you're following other major stories coming out of this industry.
Yeah, absolutely. So right now in fintech, I would say a lot of team ups. If we think of Affirm and Apple Pay, recent partnerships with Amazon and PayPal, just we've got a lot of these big players looking to fill holes with some of these smaller companies that are a little bit more nuanced. They've been devoting a lot of dollars to this technology. If you look at, Affirm and Apple Pay, obviously the Apple Pay, Apple Wallet is everywhere. And these bigger companies, they're realizing this is not my own analysis here, but when I spoke with an analyst a few weeks back, he said, Apple probably tried and realized that they couldn't work as efficiently in the buy now, pay later space because they did have a little fray into that lasted about a year. And they went looking for somebody who could fill that hole, which ended up being a firm. So I think that kind of exemplifies a larger trend of these bigger players looking to smaller names to fill those holes.
I couldn't hear that last part of your question, Emily. Apologies for that. But do you foresee Fortress playing a more active role in SoFi's operational decisions moving forward?
I think potentially yes. Again, we don't have a ton of detail on this deal. I'm assuming we're going to get more at the end of the month when they report their quarterly earnings. But right now, it just seems like a very interesting step for them, as I said, to just kind of diversify revenue streams, get some new consumers in the door, and that return to the roots with the focus on lending is definitely something to watch.
A lot of things to look out for. Again, Emily, thank you so much for your key insights and your reporting on this story. I look forward to speaking with you again soon.
Great. Thank you so much.